Energy company KenGen released its results today, with Managing Director expressing confidence that the company would be in a position to play its role in meeting the power demand required to drive Vision 2030. Revenue increased by 8%, mainly due to improved generation from the main hydro plants and new plants. Joining us now to look at the prospects and the outlook for the company in the broader energy sector is Eddy Njoroge. He's the Managing Director for KenGen. Thank you so much for joining us, sir. Take us through the results. You are very confident that you are going to be able to meet your 2030 targets. How so?
Well, what we released today is the 6-month results up to December 2012. And as you have said, we have an increase in terms of revenue by about 8%. We have an increase in terms of profit by about 14%. And really what this means that, yes, we are in a position to meet the country's, not the total of the country's demand, but we are doing what we can at least to meet the demand. If you look at that compared with what we were about 10 years ago, what we actually are doing in 6 months is what we used to do in a full year. Our total turnover then was about 8.5 billion Kenya shillings. But today, that's what we have done within 6 months.
Mm-hmm. Now,
but what we released today, yeah.
No, do continue. Do continue, sir.
What we released today was not just the results. We also took the investors through the program of what we are trying to do going forward. As you are probably aware, the Kenyan installed capacity is only about 1,700 megawatts. But we are hoping that by 2030, by the time we achieve our Vision 2030, the peak demand will then be about 17,000 megawatts. And we are talking about then building an extra 16,000 megawatts between now and 2030. Mm-hmm. And basically what I was taking the investors through is how we are going to meet this demand going forward.
Now, of course, you say that your partners, you're pointing to government and the private sector, and your development partners will enable you to make good on your promises. Take us through the kind of partnerships that you have both with government and private companies, and in particular China.
Well, there are several partnerships that we have. As you're aware, we are owned 70% by the government. We are 30% owned by the public, listed on the Nairobi Securities Exchange. And so the government is a major player in terms of what we do. And what the government did is they did get a loan from the Chinese government of about $385 million US. And that was on rent to us for drilling of geothermal wells in Orkaria. And we already have that contract going on, and we are hoping that within the next 2 years, we will have all the 8 wells drilled, and that will give us approximately 400 megawatts equivalent of steam. And so what we are trying to do now is to look for private sector to participate with us to be able to convert that steam into energy. And we have several modes that we are looking at. One of them is JV, joint ventures with KenGen. The other one is energy conversion agreements, where we can give any developer the steam, and they can be able to convert the steam into electricity, and then we take the electricity and sell to the off-taker. So that's really the sort of relationship we are looking at, where the government is providing really the drilling for the steam through a long-term loan from the Chinese government. And then we will be looking at joint ventures with any company. We have actually gone out to tender for an expression of interest for joint venture partners. And we qualified about 10 companies for that, and we'll be issuing the request for proposals to those companies.
As a final question, so give us the outlook for the energy sector in Kenya going forward, given the fact that it is quite a costly sector, and that the costs are something that is not always something that can be easily managed. We've seen in South Africa similar concerns. Today, of course, our regulator decided to not give our utility power the 16% that they had initially asked for. So just take us through the kind of long-term prospects for the energy sector in Kenya.
Yes, we do agree that the pricing must be affordable. But on the other hand, we really must have cost-reflective tariffs which therefore gives us as developers a return on our investment and also allow us to expand even further, because especially in countries like Kenya, where we are in an expansion mode, we must be able to generate enough cash flow to be able to do the projects that we need to do to expand the power. So there is a very delicate balance between the tariff itself and the need for us to have enough cash flow to go ahead and develop any further projects. We are also exactly in the same situation like South Africa. The Kenya Power and Lighting have actually put in a request for a tariff review with our regulator, and this has been subjected to public debate, and we are hoping that the regulator will be looking at that more favorably, because as I say, we do need the revenues which come through the off-taker for us to be able to expand.
Well, that's where we have
more important.
No, do continue, sir.
But more importantly is really looking forward and saying, look, if we have to meet the total country's demand going forward, for instance, the nearly 17,000 megawatts that I talked about, the requirement for that is going to be about $38 billion US. And obviously somebody must pay for that somehow, either the consumer or we would have some subsidies from government. And that's really the balance that we have always to strike between the affordable tariff and also the fact that we are in need to expand.